Commercial real estate market continues to be a volatile sector as U.S. office values are 25% below their 2022 peak. Now Moody's is warning of potential downgrades for 6 regional banks that have commercial real estate exposure. Despite this, our next guest believes that the bear market could be a great buying opportunity. For more, we welcome in Barry DiRaimondo. He is SteelWave's co-founder, chairman, and CEO. Thank you so much for being here in person with us. So we set it up nicely there for you. A lot of obstacles in the CRE space, but you're seeing opportunity.
I am. I think you're being generous when you're talking about values. Candidly, I think in the office sector, I think values are down 50 to 70%, not 25%. So depending on which side of the sale you're sitting on, if you're sitting on the seller side of the equation, you're probably a little concerned. If you're sitting on the buyer's side of the equation, you're probably looking at the opportunity as being generational in nature.
So getting in while it's inexpensive, but for
Exactly.
what?
Well, you've got two sides of the equation. You've got the capital market side, which drives values, and then you've got supply and demand, which drives leasing. And they're both a mess, candidly, at the moment. And the institutional capital world doesn't want anything to do with office right now. You know, they've got all their legacy issues in their existing portfolio. They have a negative bias towards what's going on in the office sector from a supply and demand standpoint. And what the institutions tend to do is at the darkest point in the cycle, they generally take the leasing activity trend line and extrapolate that out. And when you do that, when there's virtually no leasing activity going on, you can convince yourself that it's going to take 10 years or longer to absorb all the vacant space. Now, historically, that never is what happens. Certainly in the tech sectors, you know, our markets are all driven by tech, the markets that we're in, West Coast markets. You know, all the big tech users, whether it's creative tech, whether it's traditional tech, defense tech, life science, you know, go down the list. They're home to all the big companies here. And what you see is that these office markets tend to recover more like a hockey stick.
Right.
So it happens much quicker than most people predict.
So are we at the bottom, though, of that hockey stick yet?
Oh, I think so. And in fact, we're starting to see green shoots of leasing, certainly in the Silicon Valley.
Well, it's interesting to me that you talk about the tech space. This is just one example, but the king of tech at the moment, Jensen Huang, doesn't require people to come into the office. What if the tech world's just changing into a remote work-friendly sector?
Well, I think that it has. Candidly.
And isn't that bearish for CRE?
Well, certainly it's created, you know, significant amount of vacancy, right? So I think it's going to typically take longer to absorb that because, you know, you see the tech companies are shrinking their footprints, and it's compounded by the fact that, you know, when interest rates are zero, tech companies are focused on top line revenue growth.
Right.
And when they're focused on top line revenue growth, they're focused on growing headcount to generate that revenue. And I think what you saw, certainly during the COVID days, is that the tech companies over-leased space based on forward projections. Interest rates rise, and what you see is then they're focused on bottom line profit. And I think so, you know, we in the commercial real estate sector were more than happy to accommodate their over projections. You know, now we're suffering the hangover from that.
Right. So what would be the single biggest driver then of a return to office, given that we are seeing a more remote work-friendly sector?
Well, I think
more broadly?
I think you're seeing a return to office. You know, I think all you got to do is look at the big tech companies and see the mandates. You know, at Amazon, you're required to go back into the office, you know, 4 days a week at least. And you're seeing the same thing at all the big tech companies. So while there are some tech companies that have embraced the work from home environment, there's other ones that are clearly moving back to the more traditional with a little bit of a hybrid piece of the equation. But, you know, if you're required to work 3 days a week or 4 days a week, you still need the same amount of office space because, you know, people are still coming into the space.
Right. All right, Barry, well, we're going to have to leave it there, but really appreciate you joining us and discussing the CRE space. Thank you so much.
Thank you.
That was Barry DiRaimondo. He is SteelWave's co-founder, chairman, and CEO.